Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, what do you need to know as we go into next week? Well, certainly last week again we saw gold prices rise for a third straight week. The Federal Reserve, they did cut interest rates, and this certainly helped our gold trades last week. Over 3 positions we banked 720 points profit. In fact, we talked about this last week on Gold Asset of the Day, where we were effectively continuing to build positions. And essentially we did see that large breakout that we anticipated back above 1500 later on in the week, in fact tapping $1,514 per ounce. So well done to everybody who capitalized on that move. Not only in fact do we benefit from gold, but platinum as well. We caught a 660 point breakout on that. We've now banked partial profits again on platinum last week, and oil came in really nicely for us on Friday as well, banking 190 points over 2 positions. And of course oil prices, they rose nearly 5% on Friday on signs of progress between the US and China trade talks and stronger than expected economic data in both countries. This of course included US employment and also Chinese manufacturing activity numbers on Friday. So with that, let's move over to the charts. We'll talk you through exactly what we're looking at as we head into next week. So first of all, looking at gold here, gold closed at $1,513 per ounce on Friday. Hedge funds and money managers have again increased their net long positions in the latest week here. So we've really capitalized on this breakout move. And what I want to really draw your attention to again here is what we're seeing set up on the weekly chart, which I've mentioned before. You've got this bull flag formation, which have now started to really climb here and break above the resistance. So you've got also a pennant formation, of course, as well, where we're now seeing a nice breakout above the highs there. And we really started to get a bit of movement out of this consolidation. As we go into next week, essentially I am looking again for a higher low and also a higher high. So I'm looking again to buy back in on any pullbacks around $1,500 or lower here going into next week. So ideally between 1,490 to 1,495. If we do get a dip back towards those levels next week, this is where I would be looking again to add to my position. And then ultimately I'm looking for a breakout back towards that 1525 to 1530 resistance as we go into next week. As many of you know, normally Monday is a little bit counter flow. It can put pressure on the metals. In the latest week, we've tended to see the low of the week get put in for gold on a Tuesday around the US Open. So normally what you see at the start of the week is many inexperienced retail traders, they start to get really bearish on gold. They see it breaking down at the beginning of the week, exactly what we saw again at the beginning of last week before the FOMC statement. So you've got many technical traders, again, just using their outdated technical strategies, selling on a break of a trend line like that on gold and then getting trapped in their position, as we see then a complete counter move to the upside after Wednesday's FOMC statement, trapping all the sell shorts and then starting to squeeze those shorts as we see another breakout back above 1500, back above 1510 again, and of course hitting our levels that we were looking for over the course of this week. So that's been great, and I commend all of you who've managed to benefit off those positions in the latest week. It's been a really nice breakout and essentially closing near enough at the weekly highs there for gold, so it looks really solid as we go into next week. But again, just be wary that we might get that counter flow on Monday, pull back to around the 1500s or lower down to 1495, 1490. At those levels I'm looking to build positions again, taking the price back up to the recent levels of resistance. We are essentially consolidating, but we're definitely building here higher lows in recent weeks, and we're also starting to have another attempt to break out of the resistance levels. Hedge funds and money managers, they have increased their net long positions again on gold in the latest week. Now then, moving over to oil. As we go into next week on crude oil, we essentially managed to capitalize again on this pullback, which I suggested on last week's report, that ultimately the best case scenario here that we're looking for with oil, we banked profits previously on these breakouts to the upside, and then last week on Friday we banked 190 points on that surge to the upside for US oil. It was over a 4% move on Friday, banked 190 points over 2 trades. Now, a big news item that you want to have on the radar as we go into December is going to be the OPEC meeting. That can be a major catalyst for very large moves on the oil market. So you want to really start getting ready for that. As we go into next week, what I'm ultimately looking for is, again, the potential for another pullback back to around the 55 to 54.50 US dollar per barrel handle, and then another breakout back towards the upper end of resistance here. So oil is moving very well between its range bound channels at the moment. So effectively each time we're coming back down towards the lower end of that range, it's offering good opportunities to buy in. We've now protected our positions that we were in last week. We banked some profit profits before the close. If we do get a dip lower back towards the lower end of these channels, I'm looking to buy back in again around the 55 US dollar per barrel zone. The lower it gets, the better really. But what I'm looking for then is another breakout, taking out the previous swing high and looking for a move back towards that 57.50 to 58 US dollar per barrel handle on WTI crude oil as we go into next week. Also, what you want to have on the radar is silver and platinum too. Platinum certainly has been definitely leading the precious metals in the last few days here. Platinum had quite a significant breakout to the upside on Friday, just under a 2% move here. We've still got our long position that we entered at 885 US dollars per ounce on platinum. If I move over to silver as well, silver has been consolidating for a while here. We've still got our position from $16.98 per ounce. We've been stuck within fairly tight ranges lately. The gold silver ratio is in fact favoring gold upside next week versus silver. If you look at it on the weekly chart, we are definitely building a basing formation at the moment. Normally the precious metals, they do quite well as we get between about mid-November onwards towards the end of the month of November. From a cycle point of view, they can really start to outperform later on in the month. I'm looking at that from really mid-November onwards. I'm looking at gold, silver, platinum to really start building up momentum above these recent swing highs, especially on gold here. So gold, as we go into next week, again, keep a very close eye on the weekly chart. We're building up that bull flag formation. This is the price structure which caught a lot of sell shorts off guard here, where they started to look for a complete breakdown of price action. We're definitely not seeing that. I've been discussing this for a while, that as opposed to many technical strategies out there that were looking for this breakdown, head and shoulders pattern on gold, we were looking for the reverse here. Essentially what I'm looking for is this bull flag formation. I'm looking for this to slowly but steadily start to build a base as we go into next week, and then certainly as we get towards the end of November here as well, I am starting to look for gold prices to really have another attempt to break above the 2019 swing highs. So with that, that has been the week ahead commodity report. And of course, if you'd like to join a community of successful traders where you learn a research-driven approach to the markets, which is encompassing 3 core stages, where you're looking at market sentiment, trade flow, you're taking into account the retail positioning in the market versus the hedge funds and money managers. You're combining that with geopolitical news, fundamentals, cycles, and seasonality, as well as intelligence in the markets, and combining that to then generate a trade idea. That is what is going to give you an edge. You won't get an edge just by purely utilizing technical analysis, which I'm sure you're aware of anyway. So with that, if you would like to become a member of the Gold and Silver Club, there is an opportunity for you to do so. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You have access to our real-time trade alerts, trading research and market insights, access to our private members academy membership site, and also support and one-to-one mentoring. For more information about the service, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.